As mentioned recently, we are still waiting for the US dollar to drop down into the short-term cycle low. This daily cycle is 43 days long right now, and perhaps over the next couple of months to drop down into the intermediate cycle low, which is 118 days old at the moment. Perhaps there is a chance for dollar to give us one more poke above the Bollinger Bands, somewhere close to 105, as I mentioned in the recent video on gold. That would be a bit of a fake out of breaking above the 2017 resistance. And once dollar comes down, there will be some relief in precious metals and general stock markets. Let's look at the precious metals. Gold, I think, is likely to finish its daily cycle and maybe even its intermediate cycle very soon, if it didn't already do so yesterday with a short-term daily cycle lasting 43 days yesterday. Usually these cycles though last anywhere from 1.5 to 2.5 months. So even though gold has bounced from this 200-day moving average, perhaps there is some chance for gold to poke once more below the Bollinger Bands as the dollar pokes above its Bollinger Bands, maybe over the next few days. That would give us a daily cycle lasting for close to an average duration, say somewhere around 50 days before the cycle finishes, and that will actually likely be the intermediate cycle low as well, with the intermediate cycle now lasting for 155 days. Usually they last for around a half a year. Zooming out, gold has been relatively disappointing over the last couple of years, so perhaps this new cycle will finally give us new all-time highs. Looking at silver, just like the US dollar, perhaps might give us a bit of a fake breakout above resistance. Perhaps silver is going to give us a bit of a fake breakdown from this consolidation area. That's anywhere between the $30 that's been tested a couple of times over the last couple of years, and this bottom range of just around $21, just where silver is right now. Silver came to close to $21 a couple of times in late 2020, as well as in late last year. So if we see a bit of weakness in precious metals for another few days, perhaps there will be a bit of a fake breakdown in silver, huge volumes, some sort of a capitulation before silver is ready to perhaps go back up towards the top of this consolidation area, again back to somewhere around $30. Now let me bring in the general stock market here, and I just want to share with you that the last couple of weeks in the general stock markets have been quite testing, quite painful, and until recently our performance on the general stock market has been pretty good. Somewhere near the end of December last year, we had our last sale of SPY relatively close to those all-time highs. After that, we were lucky to get back into the trade in the second half of January, right on the day of this bullish hammer. We didn't enter at the very end of the hammer. These arrows only show the actual days of the trades that I shared with the members in the model portfolio. We were lucky enough to get out after a short-term bounce, expecting the decline into the intermediate cycle low. These three black arrows show the 3 days where we got out of SPY positions. Got back in a couple of days after that invasion, expecting a new intermediate cycle rally, added a little more in early March, still expecting the new intermediate cycle rally, which did take place, allowing us to take profits in 3 tranches in late March and early April. So far so good, but unfortunately since then, still expecting the intermediate cycle to continue perhaps for another few weeks higher. I bought some more closer to the middle of April as well as closer to late April, and now we are perhaps something around 8% down. As I mentioned, the last couple of weeks have been quite painful, but I do think at least a bit of a short-term bounce into the new short-term daily cycle is likely relatively soon. And perhaps this time I'll have to get out of the positions with perhaps no profits at all. And the main reason for that is that over the longer term, perhaps over the next 1 or 2 years, the general stock market is likely to continue generally sliding downwards. As I mentioned in one of my older videos, perhaps that's from several weeks ago, if memory serves well, 4 out of the last 5 recessions, except for the pandemic drop in 2020, actually took place after crude oil price at least doubled or more. So once we see a spike in oil price, that raises costs for a lot of industries, especially transportation, and often does lead to recession. And what do we see over the last several months? We do see crude oil price spiking to above $120, although it's now down to just over $100. So if history rhymes, we are likely to see a bit of a recession perhaps. So playing on the general stock market in the intermediate term is perhaps going to be relatively risky. I am experiencing this risk over the last couple of weeks already, but I do think there'll be a chance to get out at least close to break even. Now, with that in mind of potential sideways to down performance in the general stock market, now I want to combine that with what might happen to precious metals. This is a chart of gold versus SPY. And over here in March 2020, we see a bit of a spike into that pandemic drop. Since then, of course, the general stock markets have done very well. But over the next 1 or 2 years, if, again, we are going to see a bit of a recession, this ratio might actually go back up. Perhaps one of the targets could be back to this level of 7. That's near the pandemic spike in this ratio. And if that target is achieved, a target of 7, and if by then SPY is, let's say, fluctuating somewhere around, say, 340, that's the top just before the pandemic drop, that would actually imply a gold price of just under 2,400, just under 2,400, which is quite attractive. Remember, even in our optimistic scenarios, looking at fundamental valuation of gold miners, our optimistic scenarios only plug in the gold price of around 2,200. So is all of this actually going to play out over the next 1 or 2 years? Well, nobody knows the future. So my question to you here would be, do you also expect a bit of a recession over the next 1 or 2 years? Perhaps due to expensive energy, perhaps due to a bit of tightening by the Fed, or perhaps due to some other reasons, as some of the members mentioned at myfinancesteacher.org. The recent strict lockdowns in China might also have a bit of a negative impact on the general stock markets, even in the US. So let me know what you think down in the comments below. For now, let's go back to our precious metals, looking at the gold optimism index. And historically, especially when gold was in a bear market, that's before 2015, the intermediate cycles in gold, which usually last for around half a year, bottomed out with this optimism index somewhere below 30. But since gold entered into the bull market, and especially since 2020, with the trillions of dollars being printed, intermediate cycles in gold bottomed out with this optimism index only just between low 40s and low 50s. And we are now somewhere in the middle of that range. So again, as I mentioned, perhaps over the next several days, if not yesterday already, we are going to see the intermediate cycle low, which might be a bit of a buying opportunity in precious metals. Now though, moving on to energy, looking at crude oil, as I mentioned in the recent video on the fundamental analysis of Coeur Mining CDE, there is a bit of a chance, perhaps only around 35% chance, that the intermediate cycle low in crude oil finished lasting for 144 days, finished somewhere at the end of April. Usually these cycles last for just under half a year on crude oil. The previous cycle, though, was kind of short, so perhaps the ongoing one will be slightly longer to average out the usual duration. So I think crude oil is going to be attractive perhaps over the next couple of weeks, with the intermediate cycle coming up perhaps closer to the end of May or sometime in June. Again, as the model portfolio shows to the members at myfinancesteacher.org, I do have a bit of a starting bids for XLE in case if XLE drops over the next few weeks down to some of the previous lows. But of course, we'll have to have a closer look and cross that bridge when we get there. For now, though, looking at the optimism index in crude oil, we are nearly there. Again, historically, intermediate cycles in crude oil, which last for just around half a year, although sometimes the duration can vary quite a lot. As you see here, only since the middle of 2017, the duration varied anywhere between 104 days all the way up to 233 days. Nevertheless, with that in mind, usually the intermediate cycle lows historically bottomed with the optimism index somewhere around 30. And again, over the last couple of years, though, with trillions of dollars being printed and with energy bouncing out of extremely oversold conditions where crude oil was negative, at least on the futures, the intermediate cycles are bottoming out with the optimism index anywhere between mid-30s to high 40s. And again, at the moment, we do see the crude oil optimism index just starting to enter into this area. So perhaps we can give it another few weeks to see if we are going to get a proper drop down into the intermediate cycle low, sometimes closer to its average duration. And lastly, looking at the seasonality on crude oil, that's at least starting from 2015, we do see that usually in the second half of May, sometime into mid-June, crude oil does tend to decline, although the decline isn't usually significant. So the signal from seasonality here is not extremely clear, but at least it doesn't disagree with a bit of an intermediate cycle low, perhaps over the next couple of weeks, although this suggests that the intermediate cycle might stretch a little bit sometime into middle of July, maybe giving us a bit of a longer than usual intermediate cycle for crude oil. But again, since the previous one was relatively short, a longer ongoing intermediate cycle does make sense as well. And as to where could that low actually take place in terms of the prices, well, again, nobody does know the future, but at least coming back to the 200-day moving average and retesting the previous intermediate cycle high somewhere in the high 80s does seem quite reasonable. Or does it? You let me know down in the comments below. And of course, remember to hit that like button and subscribe to the channel. Have a nice day. Bye-bye.